Hello, this is Mike Swanson. I got a very special guest with me today. I'm speaking with David Morgan, who runs the website, the Morgan Report, and silverinvestor.com. He's one of the top, or I should say the top expert on silver investing I know in the entire world. How you doing today, David?
Well, I'm doing great, Mike. Thanks for having me on. It's been a long time.
It certainly has. I looked, and it's been about a year, but now I really wanted to get in touch with you because of what's been going on with gold and silver. I believe we had a huge, significant breakout in gold in June when it went through 1350, but silver, I don't. It's gone up too, but it hasn't really broken out through a big resistance level. So, what do you think is going on?
Well, if anyone is familiar with my work, and some people listening to you may not know of me, that's possible. You can go back and look at my main website, which is themorganreport.com, and get on our free email list and get all these interviews I do every week for free. But I've been saying for months, Mike, is that I was looking at the 1350 level basis, the continuous contract basis, the US dollar for gold. We had to break through that. And once that was accomplished, then silver would ride along at some point. And that's exactly where we are right now. We got a substantial lift in gold. And the reason I'm convinced this is a breakout, not a fake out, is one, the duration of it so far. Secondly, volume is key. And I'm not telling anything to you, Mike. I know you're very good at technical work, as am I. But for the people that aren't, volume means everything. And the volume on the up days for that breakout were significantly higher than normal. So that means that this is a real breakout. As far as silver, I started thinking about it a little more deeply, and I realized in the initiation of this bull market that goes all the way back to the year 2000, gold actually had about a 3-year run to the upside before silver ever participated. Gold went from roughly 2000, and silver didn't really break the 555 level until September of 2003. So we're sort of in a situation that's similar here, where gold has finally broken this 6-year barrier, and silver's been sitting kind of sideways for the last 3 years. Both made their intermediate lows in December of 2015. But I forget the number here, Mike. You might help me out, but I think gold was somewhere around 1050, and now we're looking at 1400. Silver was in the 14 handle, and it's just barely in the 15 handle now. So again, I think with gold's lead, and a lot of people that are on the sidelines still that are thinking, is this really real? Is it really breaking out? Is this a fake out? Is it coming back down? Am I going to buy lower? Is it going to go under 1350, and all these hesitant potential buyers out there. So once this momentum picks up, and I think with the stock market selling off, which I anticipate happening by the end of the year, not substantially, but enough to where this continuous uptrend we've had of this longest recovery in history, at least as far as the stock market is concerned, is going to reach its max and start on the downside. So if you have a softer stock market, a strong gold market, silver will follow. And it will, I still believe, overperform or perform better on a percentage basis than gold, but don't expect that immediately.
Yeah, that's what happened in the 1970s. And the first time I ever bought a gold stock was actually in 2002 in the first quarter. And like you said, silver didn't really take off for at least a year and a half from that first purchase I made. So it does seem very similar to then and now. And gold even too. Like when I first bought gold back then, it was under $300 an ounce. And that was like, I think the equivalent of this 1350 level now, a level that had been resistance for years. And even when it broke it, people had a hard time believing it was real. That seems to be the sentiment I feel. I don't know. You still go to a lot of these gold and resource conferences. Are people getting bullish at them, or are they kind of still want higher prices first?
Yeah, that's a great question. I do a lot of resource shows, and I also do a few of the mainstream ones, like the Money Show, which is one I just did recently here in Las Vegas. And the sentiment is pretty mild to cautiously optimistic. It's not like the old days when gold, made a new high every year over year for 11 years. I mean, those days are behind us now. Again, I think we're actually starting the biggest leg up ever and I think it's going to go for a few years. But it's going to take some time for people to come back into the market and participate. But no, right now, a lot of long faces, sad faces, a lot of, let me tell you my story about my gold stock that went from, $10 to zero and that type of thing. There have been some good picks. I mean, we've done pretty good at what I do. I was on Kirkland Lake pretty early, and that thing just keeps making new highs. Our top tier just continue to make money. These are, powerful stocks, multi-billion-dollar companies, and they do things right. Speculative side has been very difficult, although I found one that's probably one of the best speculations I've ever seen in my 40 years in the business. And it's really a technology stock. It's a cyanide replacement. In fact, it's talked about on our front page at themorganreport.com, sort of an overview of what this potential of this company is. And of course, gold started moving, and since this company extracts electronic waste. So you get basically crushed up printed circuit boards, and there's other electronic waste besides that, but that's when most people can understand what it is. It's the motherboard out of your computer crushed up to about the size of sand, and then through this process precipitating out the precious metals, because there's several. It's very lucrative. It's much more lucrative to actually refine electronic waste than it is most gold mines by a huge factor. So it's got a lot of potential, but very few people know about it. I'm one person in the newsletter industry writing about it, Mike, and there is one other guy who we both know who does a lot of technical work, and God love him. I think I've never met him. It's really hard, at least in my opinion, you can tell me yours, to get a good technical take on that penny stock that trades by appointment only. I mean, there's just not enough volume in there. And then, some fund manager buys a bunch and moves the stock up substantially and get this big blip. But technical work is much more advantageous for a company that's a seasoned company that has lots of shareholders, institutional following, the management owns some, and it trades every day in a volume. There you can get some technical work and probably get some ideas. But when you're looking at a stock such as I'm describing, the technical part of it isn't really that applicable as far as I can see.
Yeah, I don't, when I invest in junior and small cap stocks, I mean, I think you're right. I think you got to have in your mind, what do you think the property is worth or what they're doing is actually worth, and think of that as your price target, like a price target or market cap instead of some stock price. Makes more sense to me. Well, how can they find out about that stock? Is that for paid subscribers?
Well, I've been reserving that one for my paid membership, Mike. I mean, I have two
Sure.
letters, a free and a paid, and actually have talked about this company in the free domain, but I'm not going to name it now. So I did, a courtesy write-up for a gold newsletter guy that took my work and distributed it. He put my name on it. That's fine. And I did do one interview because one of the guys that is a subscriber also has a show like yours, and he just started off the show, named the company, and went on. I just like to back out. So if you're really, anxious, you want to save yourself the $50 it costs per month to join the report, then be my guest. It'll take you a little digging because I didn't do that. I did it twice, so it's pretty hard to find actually, or not. I mean, some people that are really good on the web might find it really quickly. I don't know.
Well, the other thing too, I own Kirkland Lake too, and that stock, and I got a bunch of big caps in my main account,
Mm-hmm.
but I don't think like stocks like Kirkland Lake or Newmont, which I also own. Uh, it's kind of funny. I feel like it's more luck in trying to figure out which one of those is going to do the best. Where with the small caps, you can have more an advantage by knowing more about the specific companies, and then there's also a better potential to actually make a lot more money, or at least a percentage off the return. So I actually believe right now is probably the best time to get in these small cap stocks because they haven't really moved yet as a whole with the gold market or silver market. So I highly recommend people subscribe to your service to get that kind of information. Could you tell them where to go and what to do that and what they would get?
Sure. If you just go to themorganreport.com, there's a subscribe button or one of the top buttons, and there's a whole sales letter there. And we're not Agora. We're not real hypey. We show you everything that you get. There's a video there as well, and it gives you pretty good overview. Plus, like anybody in the industry, I'll give you a money back guarantee. I mean, once in a while, there'll be someone that, this is not like a beginner newsletter for someone that's never bought a newsletter. You might anticipate a little more than what a newsletter provides. But if you ever subscribe to any of the main newsletters that I'll just leave unnamed, you will be extremely happy with what we provide versus what you're used to seeing. So if you have a stock account, you're familiar with the sector, you like resource stocks, you like people that are straight shooters that give you, a pretty good list to pick from. I hate long lists, but we've got the top tier, the mid tier, the near producers, and the speculations. So I suggest most people, and we have a rating service, Mike. So you pick 2 or 3 big money stocks like your Kirkland Lakes, and those are going to make you steady Eddie money. In fact, these things really popped. If you looked at them, you probably did. When the gold broke that 1350 level, I was looking like a Nico Eagle and Franco and some of these stocks that we have, and they just zoomed up there. So you spread out. You put, a couple of top tier, a couple mid tier, a couple of up and comer near producers, and 2 or 3 speculations. That's bet a little to win a lot. That's the way I teach. And you got a balanced portfolio, and you're looking at 6 stocks or something, which you can easily put on your phone and manage. And then you put your 50% stop loss on your big stocks, and on your little speculations, you either bet we can afford to lose, or get a 25% trailing stop is what I use or suggest, because as we both know, Mike, some of these little micro cap stocks can move 25% in a day. So you got to be a little careful with them.
Well, it's fun when they go up in a day like that. Well, thanks for talking to me and everyone else, and we'll have to definitely keep in touch more frequently than we have been doing.
Oh, great. Well, I appreciate the opportunity. It's always fun to talk to you, Mike. Known you for years, and I know you do good work. And off interview, we got to kind of catch up. I'm glad things are going well for you. I truly
Yeah.
am.
Thank you. Appreciate it.